Welcome back. And let's get started again. Your assets are in the Cook Inlet. And the Cook Inlet, of course, feeds Anchorage.
That's true. And the areas that we're targeting initially are exactly focused on that market. And what's compelling about that is we can remove one more variable from the equation that plagues oil and gas guys. You get a commodity price floor of $7 to $9 for gas. You can't do that in the U.S. Here you have an ongoing danger of commodity price collapse. In Alaska, not so. The Alaskan government is already warning the people of Alaska that they may face brownouts as early as the next 18 months.
Recently, you announced that you're going to be hedging your gas production from the Gulf of Mexico.
Quite right. We have placed hedges on our natural gas production in the Gulf of Mexico. And the reason that we've done that is that we saw the utility in 2009 of, if we had not had, with Macquarie working with us, hedges in place, 2009 might have had a very different outcome than it did. What we have watched, what we always watch, we monitor what's going on with commodity prices. We think oil prices are probably going to trade in a fairly stable range. You can't be that certain of the natural gas prices in the U.S. So yes, we've elected to make sure that we don't have some surprises there and hedge because it's the right thing to do.
How would you react if someone decided to call Buccaneer conservative?
Well, I think we have always been conservative. We started the business out with being conservative with a big upside. If you look at the portfolio that we started out with, that has over 300 Bs of upside associated with it. That's hardly conservative. When you look at what we're focused on in Alaska, 1.2 TCF of gas and 149 million barrels of oil as an opportunity could hardly be described as conservative. What is conservative about that is that we have replicated what we've done in the lower 48. We've gone after something that has manageable risk. We've captured a commodity price situation that's in our favor. We are going to areas that have had prior production. That's in our favor. We're going to areas that have had seismic or some kind of lowering event in terms of risk, and that's in our favor. So while we are being conservative, we're being aggressively conservative.
Let's take this conversation toward money. Initially, Buccaneer raised $20 million on the Australian market. Since then, you've done a couple of other capital raisings. But let's talk specifically about Springtree.
The reality is you have two alternatives with Buccaneer-type companies. You can shrink and die, or you can grow and prosper. And you have to have money to grow and prosper. I would like to see the share price recognizing the value of what we've put on the table and the sacrifices that we've all made, both management and shareholders, to get this to where it is. But until such time that the share price takes over and starts doing what I personally think it should be doing, which is going up, then we have to look at all of the options that are available to us, and Springtree is a very viable one. We have, because of that relationship and the one with Macquarie, where we still have our line of capital available to us to go after producing acquisitions, we have ways to put our hands on money.
I see you're opportunistic as it goes to capital as well.
You have to be opportunistic, and you have to constantly be reevaluating what opportunistic is. Sometimes it means you be very, very conservative and you protect what you've got by hedging.
2009,
and even now. And on balance, what we've elected to do is hedge to protect what we've got. And that allows us to build on a solid foundation, aggressively opportunistic.
I like it. Curtis, thank you very much for sharing this with us.
Thank you. I appreciate the time.